Household debt has increased notably in the second quarter of 2024. According to the New York Fed, total household debt increased by $109 billion this past quarter, bringing the overall debt level to $17.8 trillion. Now, what's driving this increase and how could it impact you? We really want to start out by looking at what exactly is causing the rise in household debt. So let's start with mortgages, which is the largest component of household debt. Mortgage balances increased $63 billion in quarter two, reaching a total of $12.06 trillion. Now, this growth can be attributed to the higher home prices that we've been seeing over the past year. Even though the housing market has slowed compared to the frenzy of 2021 and 2022, the combination of persistently higher home prices and increased interest rates means that buyers today are taking on larger loans than in previous years. Beyond mortgages, credit card debt has reached its all-time high. In quarter two alone, credit card balances rose $45 billion, pushing the total above $1 trillion. Now, this marks a significant 4.3 year-over-year increase in the overall consumer credit card debt. The rise suggests that many consumers are relying more heavily on these credit cards to manage their everyday expenses, especially as inflation continues to pressure household budgets. For some families, this has become a necessary way to bridge the gap between earnings and rising living costs. Now, auto loans have also seen growth, with balances increasing by approximately $10 billion in the second quarter. Now, this trend reflects the higher prices of both new and used vehicles, alongside increased borrowing costs due to higher interest rates. Now, although the car market has started to stabilize somewhat after price surging of the pandemic era, financing a vehicle is still more expensive than it was just a few years ago. Student loan balances have remained relatively steady during this period, but it's worth noting that the recent end of federal student loan payment, the pause that could lead to a huge shift in household budgets in the coming months. Now, as many millions of borrowers resume these payments, we may see shifts in spending and saving behavior that could affect the other types of debt. So really, what does this all mean for you? Well, if you're considering purchasing a home, refinancing, or tapping into your home's equity, now's the time to really plan strategically. The debt landscape is shifting, and understanding how these changes impact your financial situation is key. Now, feel free to reach out to me and we can discuss and go over and navigate these trends so you can navigate that more effectively. Thanks for watching, and don't forget to like and share and subscribe for more updates. And if you have any questions or need advice on your mortgage or any other options out there, I'm here to help.